Hello everyone and welcome back to the channel. I'm having a little bit of fun here with the thumbnails, trying to be creative and improve my thumbnail game. So we had a pretty good day on Moderna today. Let's take a look at the video that we created yesterday on what we were expecting to unfold today and what actually manifested in this area, right? I'm talking about this area, could be up here, could be up here in this general area. And we come down into this number. This is a buy. Oops, this is a buy. Okay, why? Because we can use the day's lows as an out. If we gap, so there you have it. We were expecting a gap up of $3 to $5, a pull back to the closing price, and then a run higher of $5, $6, $7. And let's take a look to see what happened today. But before I do, this is just for education and entertainment purposes. This is not financial advice. So hopefully you'll learn something and hopefully you'll be able to improve your trading by watching these videos over and over again. We do trade Moderna, but you can apply this to any stock. I just like Moderna because it moves hard and fast and I want to make money. So I need a stock to move for me to make money. That's obviously important. So let's dive into the charts, shall we? And there you have it, Moderna on the docket. And just like we talked about yesterday, the scenario was that we would gap up, right, in this, a little higher than the closing price, come into it, right? And this is a fundamental strategy that we use on a day-to-day basis. So no matter what price it's at, it depends on what the closing price is, and the strategy is it needs to gap up $3 to $5, for instance, or 0.5%, 1%, 2%, and it has to trade down into the closing price first thing in the morning. And once it does that, you can use the low of the day of that day, like we did here, as your stop loss, right? And you don't set it in the system. You would have to manually go in and exit that position once we close down here on a 5, 15 minute, 1 hour basis. That's when we decide if we're going to close the position or not, because we could spike through and come back. That happens. The markets are volatile. Other people have stops in the systems, and there is such a thing as stop hunting. So because you can see it in level 2 and it'll just hunt you down. So that's the setup that we talked about, right? The other setup that we talked about that did not unfold is if we gap down and then we traded here, then it would be a short. There was more risk there. We didn't like that setup that much because of the risk, but it didn't happen. So we didn't have to execute it, which is amazing. So we're in this sideways chop shop formation, right? So we have this break. So let's just identify these important areas. So we have a breakdown candle here, and we have a breakdown candle here. Important areas. We're definitely going to come and test those areas. And ultimately, we're going to test 407 at some point in time, right? So I am looking for the price to go higher on an intraday basis. So what happened today? We got we got our gap fill, and the risk management was there, as I discussed. It was less than 1%. I think it's a few dollars here. So this was, a perfect buying opportunity. When you have less than $4 to risk on Moderna, you really want to take that risk because it's in your favor, and you need to do it every time, and that's how you get profitable. And we had that $10 move from 378 to 488. Lots of time there for you to catch that morning rally to make your 1 to 2%. Easy. And now we just went sideways all day. So because we're in this range, it's going to be tricky. But I think that we are going to test the high here of this breakdown candle or the high of this breakdown candle. So it's going to be the same kind of setup. So if we open, there's a few different scenarios here, right? This is resistance here. So it would be nice. This would be the ideal scenario is we open up here and we in the morning we again immediately sell off to the closing price of 384. And from there, you will see a bounce coming back and try to maybe even surpass and come and test this breakdown candle high. Now, the bearish scenario, we have to wait for the first 15-minute close. So if we don't gap up and fill the gap here during the morning, then we simply have to wait for the first 15-minute to close. So maybe we open here, and then if we do have a breakdown candle, because we are in this bearish trend, right? If we look here, break down, and now we're just going sideways, probably for another move lower. So I wouldn't be surprised if we see a breakdown candle, right? Something this size or this size, a significant candle in comparison to the previous ones. And if there are no wicks, right? Like, let's remove this. But if there are no wicks, so in this particular situation, there was no wick. There's such a small wick. That's a breakdown candle. So if we have, see, here's another one. There's no wick. So if we have that type of candle in the morning, then we take that short, and then the top of that breakdown candle, if we start closing above it, right? So let's say this candle is over here. Then if we start closing above it on a 15-minute, 1 hourly basis, then we want to close our position. So that's your short and your long play. It's in this range. It's really hard to get a good setup here because you're going to get a lot of whipsaw. But again, like I talked in my last video, and I'm going to repeat it up until it happens, the first time it comes up, if we run up at any point intraday, we blast through this 400 and we come into 408 hard and fast, this will be a shorting opportunity, okay? And it's going to be a good risk reward because it'll be 412. So the entry is going to be 408, and the stop loss will, on a 15-minute, half-hour, hourly close above 412, will be the stop loss. That's your risk, about 1%. So that's the setup that we have in the side pocket. We're waiting for it to happen. Also, we have this line here. I went 360. Where does that go all the way back to, right? So this is the bottom here. So, right, at any point, if we decide to come into this area very fast, again, that's another spot. But you can see that the reason why I said that's going to be chop shop formation, look at this. There's a lot of whipsawing through here, and we're back in this zone. So it's a fight of bull with the bear. So you're going to see a lot of this for the next days. And that's why we're going to keep the setups simple, because we don't want to get stopped out and whipsawed out of trade or take trades that are not in our favor and that are not clear cut. So again, a higher open into the close, and then we maybe get a check mark. Otherwise, we wait. If we get open at the close, and then we get a breakdown candle, then we can short that. And finally, if we do gap up in this area above here, right, we can also look for a breakdown candle, because this was resistance. So if we do actually gap up another $10, let's say tomorrow, and we are in this area, we're going to wait regardless. So if it gaps up too much, we're going to wait for the 15-minute close. We're going to wait to see if it's a gap and crap, or if we're really going to try to fill the gap and go to 408, right? So if we do, that's another $8. There will be money to be made if we go, if this turns into a green candle, there will be money to be made on the upside. And if we gap up here and this turns into a red candle in the first 15 minutes, there'll be money to be made on the downside. Hopefully you learned something. Comment, subscribe, all that good stuff. Let me know how you're doing. Let me know if you need help, and I'll do my best to answer your questions. See you tomorrow.